Qualcomm actually wants to make a position or an approach onto Intel. Is this real? We're going to talk through kind of the synergies, the valuation, relate the two companies. Where are they making their revenue? Does this even make any sense? So guys, as always, really appreciate everybody joining in. I know it's kind of a last minute notice, but I figured with this kind of news, it might make sense just to kind of dive in together. I'll try to take some questions after, but basically just kind of want to stay focused on this topic here of Intel and Qualcomm possibly doing some sort of merger or Qualcomm doing a full acquisition here. So as always, guys, would appreciate it if you would smash that thumbs up if you find any value in this. First and foremost, Qualcomm is located in or headquartered in California. So I think being domestic, there is some opportunity here. Obviously, when we look at the 5-year performance, it's been a nice upward trend. The first thing I want to point out here is the market cap to revenue on Qualcomm. Qualcomm has a $188 billion market cap, doing just under $40 billion of revenue. Now, if we compare that to Intel, who we all know is in some dire stress here. We could see the one-day pop that Intel had here. But we take a look at the 5-year chart. It's a complete opposite story here. This was a $45, $50 stock, now down over 60%, right around 60%, as we can see here. And we're looking at a company that has a $93 billion market cap and does $55 billion in top-line revenue. So interesting enough, this has half the market cap of Qualcomm, but does about 30% more revenue. And so are there synergies with this company? Let's take a look at how the revenue is actually broken down here. So when we look at Intel's revenue as of 2023, obviously we can see revenue is declining. When we look at Intel's revenue, client computing, which is going to be the CPUs, is going to make up roughly 50% of their revenue. This is a company that's going to do between $55 to $60 billion of top line revenue. We can see here that $29 billion is coming from client computing, 15 billion, a little over 15 billion is coming from data centers. And then you have 5.6 billion coming from network and edge, and then 2 billion from Mobileye. So we can see the diversification here. Now, there is, in my opinion, some synergies here. So to give you kind of a broad array of what Qualcomm does, and I don't specialize in chips, I'm just kind of running through the opportunity here. Qualcomm focuses in on phones, automotive is kind of their bread and butter. Smartphones, automotive is kind of their bread and butter. And majority of their business they get from working with TSMC for their chip manufacturing. So if they were able to acquire, or somehow there was able to be a merger here, the only way I think this merger works, especially when we're talking about government money, is if it's a domestic company that's merging with Intel. Now, this is probably, most likely, this is probably going to get blocked initially. And when we look at history, Donald Trump actually blocked a similar merger, not during his presidency when, let me see, I believe it was Qualcomm was getting acquired by somebody. I'm trying to remember. Qualcomm was getting, I think Broadcom was trying to acquire Qualcomm, and the Trump when Trump was the president, I believe he blocked that. Don't quote me on that, but I'm pretty sure. So I do think a few things are working here. Number one, I think the government is giving Intel a tremendous amount of money when we really look at this. So the U.S. Department of Commerce has proposed an $8.5 billion indirect funding through the CHIPS Act, and this is for Intel for projects in Arizona, New Mexico, Ohio, and Oregon. Intel is also expected to benefit from U.S. Treasury Department investment tax credit of up to 25% on more than $100 billion in qualified investments and eligible for federal loans of up to $11 billion. So we can see here that Intel's got tremendous ties to the government at this point in time. It's kind of their lifeline, in my opinion. If I think Intel is going to survive, I actually think it's going to survive because the government wants to be reliant on more domestic development of chips, and Intel is kind of the front runner of this. And I would say that Pat Gelsinger has kind of has really not managed Intel's turnaround that well. But I do think that there is decent capital here. I think with the government backing them up, they still have a chance to turn all of this around. And I'm going to get to a valuation perspective on all this as well, what I think Intel can kind of go for here. So, few problems here. You have a company in Qualcomm that does right around 12 billion in free cash flow. Does 12 billion in free cash flow on 37 billion of top line revenue. When we look at Intel's doing 55 billion in revenue, and their cash flow has been negative over the last few years. So negative 12 billion, negative 14 billion, negative 9 billion. So they're essentially kind of hemorrhaging money here, but they still have some decent opportunities to still have liquidity. And obviously, I think the government stepping in and helping them is basically a lifeline at this point in time. The business is kind of floundering, but still top line revenue is there. This is a company that does over 50 billion in revenue. So now let's talk about the synergies. Qualcomm would probably be able to save on fab production with Intel. They would be able to have a well-balanced portfolio when we talk about PCs, data centers, smartphones, automotive. They would have a pretty diverse portfolio overall. We think about, if we just do simple math here, 55 billion plus an additional, call it 40 billion, and this would be a company that does pretty darn close to $90 billion of revenue. And if there's cost saving synergies here, this could be a company that free cash flow is 200 billion. When we think about kind of what they're trading for from a free cash flow standpoint, doing 13 billion in free cash flow and get a $93 billion market cap, what are we looking at? About seven times price to free cash flow. So you can kind of back into the math on this one a little bit. Where do I think Intel's valued if we just look at it from a strictly valuation standpoint? As you guys can see here, this was done a little while ago here. So from a free cash flow standpoint, I think it's probably a $12 to $13 stock. And then from a multiple to EBITDA, I think it's a $19 stock. So my price target comes in between $17 to $18 a share. 52-week low in the stock is sitting right around $18 a share. Now, that's me building some safety in here. But if I were to just say that they're going to buy them for some sort of fair market value, I would say probably $35 a share might make sense, personally. As you guys can see here, when I take out my required rate of return, I'm thinking about a $35 to $40 stock price might make sense for Qualcomm to kind of take this over. Now this obviously would need to go through Federal Trade Commission. They've been blocking everything. So I don't know if that's going to happen, but I think at the end of the day, the question's going to be, does this benefit domestic chip manufacturing? And I think overall it kind of takes the competitive nature of chip manufacturing out of the equation, but because there's no real overlap, it really doesn't. So if these two companies were competitors and there was a takeover, that might get blocked. But the fact that they focus in different areas, it's not really going to impact kind of the market when all the market is owned by this one company, right? It would be a diversified portfolio. It wouldn't just be a grocery chain buying another grocery chain to control prices, right? They wouldn't just be buying another company that focuses on cell phones and focuses on other aspects that they already have exposure to, so they can kind of jack up the prices on everybody. This would be a transition that allows them to have a larger portfolio, save on fab manufacturing, and hopefully management can now have the synergies to really get the free cash flow going. It's a really interesting setup. And the other thing that makes this interesting is supposedly Pat Gelsinger has a really good relationship with Qualcomm CEO that they've communicated many times in the past. And when we look at some of the news that's dropped here, neither company came out and actually confirmed or denied these rumors. And in my opinion, I believe that these rumors are true. I do think that Qualcomm is looking to possibly take over Intel. I think it makes sense because Intel sold off 65%. And when you look at valuations here, if you can add, let's just say Qualcomm was willing to buy Intel for $35 a share, which would be a 50% increase of basically where Intel's sitting right now. So Intel's sitting, just for easy math, guys, Intel's sitting right around $100 billion market cap. Qualcomm tries to acquire Intel for $150 billion. Not only do they get a wider diversification in the chip manufacturing aspect, but they also gain $55 billion of top line revenue and get access to fab manufacturing, right? So it does make a lot of sense here. I would say that this would be one of the few companies that could actually pull it off for multiple reasons. Number one, as I stated, prior relationship to Pat Gelsinger. Number two, I think the government is probably concerned of Intel's stock performance and fundamentals here. This is a company that's been losing a lot of money. Stock price has deteriorated extremely fast. I think there's a lot of concerns of sustainability over the next 4 to 5 years. And they definitely want to be a true player domestically for chip manufacturing and CPU use and data centers, obviously. And so it's a real interesting setup here. Wanted to kind of go through this. Let me know what your thoughts are down in the comments, guys. If you're thinking that this is going to turn into anything, or do you think this is just a bunch of fluff? Would like to know your opinion. Does anybody own Intel? On the chat here as well. So curious to know what people think about this. I think standing alone, as I stated, I think standing alone, you're probably looking at a $17, $18 stock in Intel. I think when we look forward, this is a multiple year turnaround story. It's going to be a lot of CapEx going into turning this ship around. But when you look at valuation, it's pretty compelling that this is a company that can still probably push $55 billion to $60 billion in top line revenue, but they are stretched fairly thin. Now, from what I heard, Qualcomm is willing to take over Intel and sell out any parts that would be considered blocked by the FTC. They're willing to kind of part ways and sell those assets out from Intel to raise capital. Let's see what Intel's projected to do for earnings and revenue real quick. Let me see here. But it's pretty rare to see a company that does 30% less revenue actually put in the bid for Intel. So Intel's projected to do right around $57 billion of top line revenue in 2025 and about $1 of earnings, which means that it's basically trading at 20 times earnings, which is not too crazy here. So, it's almost a buy at these levels if you think that they can produce this, but it seems like there's a lot of capital expenditures, a lot of problems going on with Intel as well. And then they're projected to grow around 5 or 6% from that point on. Let me just make sure my models are set up. So 2025, $57 billion in revenue. 2025, I had them doing $52 billion in revenue because I was building some safety in there. I actually think that's probably a little bit more accurate, but we'll bump it up just to kind of be on par here. So we'll say $55 billion in revenue for 2025. I still think you're looking at probably a $35 a share takeover on this, on Intel, which would be a 50% increase for the current stock price, in my opinion. I think that's where it would make sense to purchase Intel. Now, I normally would think this would get blocked, but something tells me this might not get blocked for multiple reasons. As I stated, I think when you look at the fundamentals of Intel and you take a look at how many problems they're dealing with, to kind of have a bit of Qualcomm coming in here, a company that has a little bit better financials, a little bit more stability, would really, I think, bode confidence in the government investing more into domestic allocation of chips. But, the FTC has been really, really stringent on mergers and acquisitions. So I do think this is real. I do think this has kind of been in the cards for an extended period of time. I believe that with the Wall Street Journal reporting this, where there's smoke, there's definitely fire. Intel is one that kind of has been left for dead. It would be a great acquisition, in my opinion. I mean, what better time to buy this company when you already have a sustainable business that complements this well, and it's sold off 65%, but still has a pretty good footprint in CPUs and data centers. Now, I think Intel is trying to do way too many things right now. I think Intel is trying to do way too many things. They're stretched extremely thin. I have a hard time understanding their path to sustainability, path to profitability, path to remaining afloat. I don't know. It's pretty interesting. We'll take a look at, we'll see if there's any questions out there. So yeah, just to kind of recap, we got some questions up in here. What's up, Arnigaro? So yeah, basically to kind of recap here, just to kind of go through what happened at the end of the trading day today was, Qualcomm has approached Intel for a possible takeover. The chances of this going through first time is probably going to be slim to none. But if we're really thinking longer term here, from a political standpoint, from a domestic development of chip standpoint, I think Intel needs as much help as they can get. I think this is a good deal for both parties. I really do. There's a nice overlap here when you look at data centers for Intel, when you look at fab, when you look at CPU, and then you add that to Qualcomm with their automotive exposure and their smartphone exposure, you get a really nice overlap of a complete business model and possibly a very, very dominant player domestically, which is key, right? Domestic dominant player when it comes to global chip manufacturing and global chip offerings. So when I look at this, it really does look like it's almost like drastic, drastic measures call for drastic actions, or, and I feel like this is definitely a situation for Intel as well. So it's a pretty interesting setup. I think if you were looking at Intel and it had okay fundamentals, you'd probably be looking closer to $35, $40 stock. I think a reasonable price to buy the company at would be $35 a share when I run my analysis, as I kind of just did with you guys, zeroing out my rate of return built into it and what I think Qualcomm could offer. And I think, between $35 and $40 makes sense. I think they want to get some sort of deal on this. But I think it would be because they don't have a tremendous amount of cash, and I just don't think this could get financed for that kind of money. That's a lot of money to be financing. I just don't know how the financing would work. I imagine that $40 or $50 billion, let's just call it a $150 billion acquisition for simple math, okay? $150 billion acquisition for simple math. I would say that there has to be some sort of stock dilution that Qualcomm would have to do to raise the capital and take over shares of Intel. They have some cash on the balance sheet. I'm sure some of it would be financed. That's going to be the toughest part of figuring this out, is how would they finance the deal such a large deal when you really look at it. They're basically buying, because I do think they have to pay some sort of a premium. Yes, the stock sold off 65%, but I do think they have to be buying the stock probably for at least a 20 to 30% premium to where it's trading right now, which would just simple math put it at $130 billion market cap. Qualcomm sitting at $188 billion market cap. Really, really tough one to figure out on how the financing would work on this one. And I think Intel kind of needs to do something like this. I just don't think they have any direction. I think new management, a new umbrella, a new identity would go a long way with the company, and I think it would actually put a vote of confidence both for investors, but also for also the political aspect of getting government money. So this one's kind of interesting. I wanted to bring this one to your attention. It was kind of an end of day thing. We went over the diversification of Intel's revenue. Pretty nice overlap for each company. So I think it would be a great acquisition longer term. No, Maverick Jones, do I think it was a short covering that caused the spike in Intel today? So I actually think it was two things. Actually, what's the short interest on Intel? Let me see real quick. So the short interest actually looks pretty low on the stock, to be honest with you here. I don't think this was a short squeeze. Around 2 to 3% short interest. I'm going to pull up the chart. I'll explain what I think happened today. So there's two things that are taking place with Intel stock here. Number one is I do think the stock is actually forming a bottom. Really, really hard to tell right now, but it looks like it's forming a bottom here. Now, this was a key historical support that I'm looking at here, right around $19 even, okay? So this goes back 20 years of Intel's price action that this has been built on. When I look at what happened here, I don't think it was necessarily a short squeeze as it was repositioning, and I think that the stock is very, very close to finding some sort of bottom here. So when I look at these technicals, it tried to bottom out twice here, which is usually a good sign, a double bottom formulating here, okay? And then we got a one count to the upside on this news. And it's also forcing a lot of the oversold conditions to kind of bounce here. So I think this is a stock that's been completely oversold, that's starting to possibly find a bottom, and any sort of catalyst at this point in time could send the stock, 20, 30% just based off of how far it's sold off, right? So it's sold off 65%. It basically needs to go over 100% up to even get back to where it was. But a 20 or 30% pop in the stock makes a lot of sense considering that it did form a double bottom. There's now kind of like the worst might be behind Intel at this point in time when we look at the fundamentals, right? So when we look at forward earnings now possibly being positive for 2025, where they might be able to earn between 80 cents to maybe $1.20 depending, then we're kind of at a peak or a trough earnings expectation. The biggest concern I have with them is the direction, or they just don't seem to have any sort of a path. It's really just all over the place, and that's what the concerning thing about Intel is right now. But this alliance makes a lot of sense to me. It really does. When we think about domestic manufacturing, when we think about the opportunity that's at hand to kind of allow these two companies to merge, to really be a phenomenal long-term player for domestic U.S. chips, I think they should let this go through if this is real. I don't know how it gets financed. I don't know how this gets financed. I don't know how a $188 billion company finances a $150 billion purchase. I just don't know how. I mean, I'm sure it obviously can be done. I'm just not sure what the process would be. Would it be an all stock purchase? Most likely a majority of it would be a majority stock purchase of some sort. I'm sure that there's aspects of Intel's business that Qualcomm would like to sell off maybe. So maybe at first it's pretty dilutive, but then they can knock down debt if they sell off portions of Intel's business that they don't want, and they can buy back stock, right? To make sure to kind of put a bid under the price. But how this deal gets done is really going to be interesting to play. And a lot of people are thinking this is just a bunch of hoopla. I don't think it is. I really don't think it is. I actually think it's Qualcomm looking at the situation as this is a great opportunity to buy a company that does over 50 billion in top line revenue and get access now to the CPU market, to the data center market, and control the fab aspect. Because if you're relying on TSMC to do a lot of the manufacturing, well, you essentially at this point in time should be able to get cost control when you're doing it in-house. So now this allows, I just think there's a lot of synergies here. Now this allows Qualcomm, if they're really able to do this acquisition, this allows Qualcomm to kind of control manufacturing prices, right? Allows them to have access to multiple chip manufacturing. They're not just going to sell 2 or 3 different things. Now they have data centers. Now they have CPUs. And when we think about data centers kind of being one of the larger probably demands that we're going to see over the next 5 to 10 years when it comes to chip manufacturing, the quickest way to kind of get exposure to that would be to actually do an acquisition. Because when we think about the chip manufacturers, they've already kind of got their footprint there, right? So in order to, Qualcomm's trying to get in the space, and they're just not able to organically grow past an Intel, organically grow past some of these other chip manufacturers or chip processors. So what's the easiest way for them to kind of essentially be a big time player is to make an acquisition on a company that sold off 65%. So I personally think it does make sense. I don't think that this is a bunch of hoopla. I actually do think that this makes sense. I'm not so sure how this deal gets done. That's kind of what's holding me up. And at that point in time, does the FTC even allow it to go through? And as I stated before, this is a little bit different than some of the other mergers that we've seen, because I do think we need to have, this is becoming a state of security when we're too reliant on other countries to handle a lot of this chip manufacturing, right? We can see what's going on with China and Taiwan. And so to be able to do it domestically and be a big time player would actually help in a lot of ways for our economic growth as a country. So I do think that this should possibly get passed. I just don't know how the acquisition takes place. So that was kind of just my 2 quick drill on what happened earlier what happened a few hours ago today at the close of the bell. So very, very interesting stuff. I think it's a smart move when you got a company down 65% and everything's going bad. Why not try to acquire it and see if there's the synergies there, especially if you can get in at a good price. The question is going to be, does Pat Gelsinger finally tap out and hand the business over, or is this some sort of merger process here where they're both under one umbrella? So pretty interesting stuff today, guys. Pretty interesting stuff. Wanted to kind of pop on here really quick and go over that. Thought you guys might find it, so the comment is, it's kind of weird to allow this though. Originally, that was my thought process too. But the reason why I do think, so let's look at the Kroger. Let's look at this as like the Kroger and all these, I'm drawing a blank now. The Kroger acquisition, was it Aldi's, I believe. That's getting blocked because they're concerned that will be one of the largest grocery chains after the acquisition happens. Kroger's already one of the largest grocery chains as is. Now you add in an acquisition like that, Kroger's stating that this should be cost savings for the consumer, right? But the FTC is probably going to block it because they're scared that it's turning into, 3 or 4 names that really own the whole groceries chains, and that there's going to be price gouging that takes place with the consumer. I actually think this is the complete opposite from this merger, because it's a grocery chain buying a grocery chain. This is a chip company that focuses on automotive and cell phone or smartphones that's trying to acquire Intel, who's the fab manufacturer, CPUs, data centers, completely, even though they're the same product, completely different customer, consumer. There's not going to be as much price gouging. And to be honest with you, they should be able to undercut competitors because the fab's going to be done in-house. And that would be a competitive advantage that most chip manufacturers wouldn't have. So not only could we have a domestic chip manufacturer here, but we could actually be competitive on both the technology side, but the cost saving side if they're able to kind of execute the way Intel has been talking about executing. Now, saying one thing and doing one thing is completely different, but pretty interesting to say the least, I would say. But yeah, that's kind of how I see it playing out anyway. But yeah, I figured I would come on here and talk through that. I thought it was pretty interesting. Just don't know how the deal gets done. I really don't. But anyway, ladies and gentlemen, appreciate everybody's time. Wanted to pop on here and kind of go through that. Hopefully everybody enjoyed. As I stated, I think, maybe between $30 to $40 for Intel would make a lot of sense if this was if that's the price tag that they're going to buy for. That's about where I think it would make sense. Does Pat Gelsinger want to swallow that pill and take his investors for that kind of ride that maybe have wrote it down from $50, $55 a share? But I think where the stock is sitting and kind of the plans that are ahead, this is a long turnaround story, and this would be the quickest way for Gelsinger to kind of do right by the investors. Be nice to see them have some sort of equity position in the merger, though, as well. So, as always, guys, appreciate everybody's time. Thank you so much for popping in. And if we don't have any questions, I'm going to probably sign off here. And we will see you guys in the next one.